We woke up this morning to news about volatile markets overseas, including a giant drop in Japan, and it got us kind of worried. Also, a little confused. Fortunately, we have Jill Schlesinger's phone number. We woke her up in the middle of the night, and she graciously agreed to join us to break it all down for us. Jill, good morning. Thank you.
I'm glad to be with you this morning.
All right, so let's talk about these sharp downturns in international market. Really large downturns. What do you make of it?
Well, last week we got some disappointing data about the U.S. economy. So we found out that the jobs that were created were fewer than expected, and the unemployment rate actually went up to 4.3%. We've seen 4 consecutive months where the unemployment rate is creeping up. And you put that together with the earnings reports from Starbucks and McDonald's, and all of a sudden we started to worry that maybe consumers are under pressure, the job market isn't as strong. Then we get this generalized fear that the economy is slowing down, maybe headed into a recession. That caused stocks to sell off last week in the U.S. We saw the selling continue globally overnight. And this morning we are looking at a potential another down day on Wall Street.
So for investors who are looking at the market, and Jill, we talk about this a lot, people try to time the market. What should they be doing in response to what we're seeing?
If you are a long-term investor, take a deep breath. It is very scary, I get it. But if you're investing for decades in the future, even if you're 60 years old, you're investing for decades in the future, you stay still, you do nothing. You try to maintain your game plan. If you need cash within the next 6 to 12 months, then that money never should have been at risk. Hurry up, go sell it, put it in someplace safe. But as long as you're in a long-term investment portfolio, you shouldn't worry. One other thing you should be happy about, we've talked so long about how interest rates are high, they're coming down. Interest rates tend to come down as economies slow. So we'll see this morning. Mortgage rates, they're lower right now than they've been for all of 2024, Vlad.
All right, Jill Schlesinger for us. Thank you, Jill, for getting up just for us. We appreciate it.
Of course.